Hey everyone. Well, everyone's freaking out about the markets right now across the world, and rightfully so. We've seen a massive increase in volatility. But in today's video, we'll be taking a look at our technical analysis levels for the S&P 500 and why this zone's so important ahead of the non-farm jobs payroll numbers. And we'll also be taking a look at our thoughts on the Nasdaq, IWM, US oil, Tesla, gold, and the crypto markets. There's a lot to discuss, plenty to cover, and possibly some increased volatility coming our way. See you soon, guys. All right, well, here begins our market recap for the markets closed 2nd of December 2021. And when we take a look at a heat map here of the S&P 500 large companies, you'll notice it wasn't led by the FANG. For once, it wasn't really the large stocks that were doing it. It was everything else. Look at the financials, super green industrial, super green energy. It was a pretty nice day overall, and many stocks that have been getting belted recently did start to improve. When we take a look at the indices, every one of the indices did well, but it wasn't the Nasdaq. Remember, the Nasdaq has one of the weakest looking patterns on it right now. It has that potential head and shoulders rejection there, but we have IWM finally showing some green, 2.79%. Dow Jones 1.89% and S&P 500 a nice healthy 1.51%. And they quickly repriced themselves through the start of the session and then hovered at this level. And a lot of you are probably wondering, why is it hovering here? It's hit a key level and it's ahead of a massive bit of economic news in the US, being the US jobs numbers. Whenever these numbers come out, first week of every month, you need to be paying attention, and I'm hoping it gives us a clearer direction leading into next week. Let's go with positive. We always want to go with optimism here on the channel if we can. If it does come through, we might see a nice breakout, and then of course that could lead on to a further rally and possibly finally Santa coming for Christmas. We'll have to find out soon. Let's talk about the sectors that did the best. So we mentioned financials before, industrials. Look at these two out in front, almost up 3%. Fantastic stuff. Some of the defensives a little bit lackluster down here, but in general, everything was up and most of the sectors were doing very well throughout the day. Let's move into the technical analysis straight away, and we'll start by discussing the VIX. And the VIX did drop off a little bit from its high. So this is the fear index in the market. A lot of people look at this and they say, okay, when it's above 20, I'm going to reduce some of my trades. Maybe you'll reduce your swing-based trades, and that's actually not a bad idea, and you'll be looking more at being fast and nimble, scalp, and of course day trade, and then pick your investment levels. That's a good kind of rule of thumb. If the VIX is above 20, be a little bit scared for your swing, because the markets start to react incredibly quickly, and swing is based more on a methodical, better market participation. So VIX is very, very high. Now, if it comes back down underneath 20, well, that's a different scenario. So do we have any technical analysis we can really do here? I think it's difficult sometimes to do technical analysis on the VIX just due to the way that the fear works, but we have had it spike back up, move down, and we technically have some resistance here, which could act as support. We're ahead of the NFP numbers, as we've mentioned several times, and that could do anything. So it's really a bit of a guess here from what's going on. It's when you go through all these different other markets, though, that you start to realize this is what happens. The market pushes towards a key level of resistance or support ahead of big news. And here, the TLT, this is the 20-year bonds, you'll notice they're right at resistance ahead of the announcement. This is exactly where you expect them to be, because if the announcement is one way or the other, possibly Wall Street might move TLT through, or they may even sell it off. Just, it really depends on what they choose to do and what the number ends up presenting. But you'll notice it's right at that technical resistance, and we'll be watching this throughout the week. We'll obviously watch it on our weekend video, see if we get that closure above the previous peak. It's a very important zone, 20-year bonds. We know that there's always that movement into safe havens when there's fear in the markets, and we're at a critical level, which could end up escalating into a much bigger movement into the safe havens. So we'll be watching this as much as possible. DXY is another one that's kind of just floating around. The US dollar usually likes to be at a point of support or resistance. It's bought a few times off this level. You'll notice there's some bullish hammers here. It's actually looking relatively strong, but nothing insane at this stage. So we'll continue to watch that throughout the session, but it is looking okay in terms of strength. Now, because there's strength in the DXY, it's put pressure on things like gold, and this will probably be a highly volatile metal or commodity coming into the non-farm payrolls. Now, this chart, I'm not going to tell you it looks good right now, because it doesn't. You've got so many rejections across the board, and you also have that little bit of a sell-off that started underneath. Now, we've talked many days now about realistically gold. We've talked about the seasonal that comes in that's technically bullish for the last 4 years around December, and that's all great and well, but we still need the technical analysis to turn around with us. You can't just say, oh, I think I'm going to buy gold because every other year it's gone up in December. That's cool, but it's not bringing together multiple reasons. And the multiple reasons right now, we want to see it smash through that kind of 1810 area. We need to see some strength coming in here for gold, and it hasn't shown it to us just yet. So if it gets above all these rejections, okay, that's going to be a bullish sign. At this stage, it does look negative. I can see why some people would be selling it, but I also find it weird that we've got like rejection, 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 such an obvious kind of sell. And yes, it's coming through at this stage, but is it a bit more of a trap, potential false breakout? We don't really know that. I mean, if I was guessing, I would say it's more negative than positive. That's just because the price action is showing it. I'm just choosing to be neutral here on gold, and because I have that bullish bias, but only the bullish bias should we see the right technicals. So we'll continue to watch gold and silver, but at this stage, nothing much going on. US oil did see a rebound. OPEC kind of did the right thing. They tried to push the oil price up. You'll notice here at the time of recording, we're about to close this daily candle here on the futures market, and this is a very nice bullish looking hammer. Very good turnaround, and it's turning around right around where we want it to, which is the previous resistance becoming support. It's a good little level for US oil to do this. Now, if we think about the 4 hour, the 2 hour, etc., do we have a turnaround story just yet? Well, I think the 4 hour 50 has been something that's held the oil trade back a little bit, so that might be something people are looking for. But a lot of interest will come in around these zones here. So if we start to bust past this resistance, we move through there. What have we done? We've basically gone through a point of resistance. We're looking for lightning bolts. We're looking for further double bottoms. And I think there's some interesting zones that we should be focusing on. We go down to the 2 hour. The 20 moving average has just been closed above. Now that's happened once before. And we're looking for, I feel like, a movement above here, about this 69.40. At that point, we're putting in a good base. We've got one low, a retest of that low, max pain, which is where the market goes, and it kind of creates a false breakout, fully reverses that, which is a positive story. And then once we breach through this area, what have we done? We've really put in a bit of an accumulation base. So US oil will be watching this very closely. It's starting to look a little bit more exciting towards the bulls, and I think this is a good sign what OPEC did if you're a bull in that particular market. Let's go to the stock market now. Before we go into the indices and discuss the S&P 500 critical levels, let's talk about Tesla. So Tesla's come down to this 1,065. Now, for whatever reason, that was previous support. We did see it buy twice off that level. It's bought again off that zone, and it's sitting about 1,084. In general, it looks relatively positive. However, there has been a few other electric car manufacturers such as NIO and things that got smashed in the last couple of sessions of trade. So be careful there. 1,065, currently a level of support. It closed underneath this, back to 1,000 we go for Tesla. If it holds here, then we're looking for it to move back up and then of course find some resistance around this 1130. So you look, Tesla traders, you guys know what you're in. You're in consolidation on the larger time frames, and you're really just trying to day trade and scalp within this. And we'll continue to cover it, but in general, we're stuck within a bit of a range after what was an explosive move that we followed on this channel very deeply, and we love that very much. But I think that we're in consolidation at this stage. I know we've been talking about that for quite a few weeks. IWM, nice rebound, 212 was almost hit. We're sitting around that 213 previous support. It has bounced. You can see the volume trade here is quite high on this particular pair, but in general, it's just a first turnaround story. What type of moving averages do we want to focus on? Where do we want to see the closures happen? Well, 2 hour 20 has held this thing down every time it's rallied. We're getting close to that point ahead of non-farms. What if we get something like this? Pull back, movement through, lightning bolt as it breaks through the 2 hour 20. Wouldn't that be a good, nice base formation story? I would hope so. And IWM finally might show us the turnaround. At this stage, we haven't seen it, but we'll continue to cover it as much as possible. QQQ, Nasdaq, it did come back up, but really the problem for this is always going to be right now, this 4 hour, 2 hour daily head and shoulders. I mean, here it is, the left shoulder, the head, the right shoulder. It's clear as day. I don't really like to short the market too much. When you do, sometimes it can be a little bit dangerous, but it's closed right at that correct level. And I'm sure shorters did come in here. Now, the reason I say that is because shorting is good, but you've got to be very, very quick. Patterns tend not to go the full distance. So if you expect this, they tend to be a little bit shorter, as in they don't go down as much. And you can probably see since the whole thing has begun, it's been very difficult to short the market efficiently for a sustained period of time. Of course, since the crash, the pandemic, the Fed, all of these things, it's been very quick, very fast. You've got to be nimble and you need to know what you're doing. This does look negative on the overall. I mean, you can see the price action is showing us negativity here, but non-farm payrolls could easily bash that straight back up. So being fast, being a day trader or a scalper right now, if you see the turnaround, of course, negativity would come back into this market. And then you're looking for, well, theoretically, you're looking for this movement here to conclude. This movement pushes you back into the bottom of our ascending channel, and we'd be pretty happy with that move from a technical base. Now, that's exactly where you'd be looking at. Would you potentially be doing this? Well, it all comes down to the non-farm payrolls. Let's find out what the price action looks like. But certainly a rejection here in QQQ for now. NDX will look the same, and there's the ascending channel, just so you guys can see how good it's been recently at picking price action. It's a nice one to have on your charts if you're a first-time viewer here. Let's move over to the US 500. We have the critical zone. Again, previous supports becoming resistance. You can see it here, support, support, resistance. Fantastic level. We're looking for that turnaround story. So basically, if the non-farm payrolls number is no good, we'll see US 500 sell off from here, potentially put downward pressure back on the 4,500, but we knew this 4,500 was a huge area. Not only did we have a lot of puts there, which meant that it was going to be hopefully a support for expiry on Friday, but also it's a big psychological zone. And on the left-hand side, we were getting around that previous level of kind of big issues for the market. So 4,500 was reached. We have buying. We got that nice closed buying here, nice wick showing the accumulation, showing the huge power of the buyers around this level. It turned out that it was pretty much right on that weekly 20 as well, which we can see here, nice buy zone as well in the markets. And it's all about the non-farms. You can see we breached maybe a downtrend here at the same time. Is that going to be pretty strong? Absolutely. We're looking for that. And then of course we resume uptrend and feel very good about the world. The other scenario, we sell off due to non-farms, put pressure on this level. I probably still think there's going to be some buying here. And if we breach past here, well, then we're really talking. The bears will come out. They'll be excited. You guys will, all the bears in the comment section will go, I told you so. That's right. Take that. But that will only happen if they get underneath this area. So very important next 24 hours of trade. It's going to possibly make some decisions here on the market on what direction it wants to go to next. So very fantastic stuff there. Let's move over to the S&P 500 as well, just from the real market rather than futures with the SPX here. I've just drawn this up so you can see the Fibonacci pullback of the rally. And remember, we still are in a seasonally strong period of the year, so we can't really go against that. The Santa rally is technically a thing. It's usually a good point. December tends to be relatively festive, not every year, but it does. And January tends to be okay as well. And it's really that late Jan, Feb period where the market starts to have a massive tantrum, or that March period. We get those big sell-offs that usually occur in that period. And I'm not saying that 2022 won't bring a decent sell-off. It's my belief that we might even get a 10 to 15% correction over that period, but I'm not sure if it's going to happen right now. So the 38.2 and the 50 fib, this is a zone that Wall Street loves to buy in when you've got a clear fib pullback. It's a good one. We've seen the buying pressure already come through. Will it continue? I'll let you guys in the comments section tell me, are you a bull or a bear in the markets right now? Tell me that, plus it'll show me that you got to the end of the video or very close to it. Let's move over to Bitcoin. Bitcoin continues to consolidate. We've got this thing trapped as best we can. We're using a log chart here just because of the speed of the market and the movements to get our trend lines going on. 60,000 still remains one of the key zones that we're looking for a breakout. If that breakout occurs, we believe there could be some nice rally here. And it kind of seems like it's consolidating almost for like an inverse head and shoulders here. Got the left shoulder, got the head, got the right shoulder. Imagine a snap of this. I'm super excited should it happen. And this will be a very interesting time here for Bitcoin. So Bitcoin holds for now. Price action looks relatively okay. Daily, if we take a look at it, it has no idea what it wants to do. It's like long leg doji here, then you got long leg doji, then you got a rejection candle, and you got a rejection candle coming up. Neutralized is how I look at it. Maybe non-farm payrolls gets through. We do have the daily 2050 above as well, so getting through 58 will be a big deal. Getting a closure above that, huge deal. And then getting towards that 60 will be a big one. If you're looking to the short side, well, you just want it to smash this trend line here. And then, of course, down underneath 52K would be where the bears fully take control of this market. And we'd be in a really big ripping short at that point. It'd be pretty scary. All right, guys, remember the big news. Non-farm payrolls, 8:30 a.m. New York time. Good luck coming into it. It should be okay. If you're an optimist in the markets, in general, non-farm payrolls, while it increases volatility, the normal way it works is it goes one way and then it goes the other way quite quickly afterwards. So it goes like this, bang, bang, or bang, bang. The market interprets it. It's very difficult to interpret this number correctly, and they will push it wherever they want it unless the number is drastically different. And then, of course, it'll go off in that direction. Thanks so much. Subscribe if you like the video. And, of course, tell your friends, share it around. It does help us out. Give us a like as well. Catch you for now. Bye.